in the real estate space. Macrotech Developers is the stock on our radar. The Mumbai residential registrations have witnessed a decline in May this year, both on a sequential as well as on a year-on-year basis. To discuss how the real estate pictures on the ground, how the order pipeline is looking like, we have Prashant Bindal, who's the Chief Sales Officer at Macrotech Developers, joining us now. Prashant, good morning, and it's great having you on the show. Thanks for taking the time out to speak to CNBC-TV18. First, of course, the narrative is that the Mumbai real estate market is booming. But if you look at the numbers, there has been a dip in registrations month on month and year on year. It's not major, but just trying to understand what is the demand situation currently. Is there some cooling off of the real estate demand in terms of conversions as well? And what do you see as the way forward?
Good morning, Sonia. I think the momentum that we saw from 3 years back across the housing sector, and especially in the branded segment, that continues to be very robust, and we hope to continue to ride this momentum. As far as there could be a monthly pluses and minuses in terms of registration, but in terms of how we evaluate in terms of number of walk-ins that come to our site, and you talked about conversion, they continue to be very robust and very exciting, and across the price points. So from that perspective, it looks to be very exciting. And we are very confident of the way the things have moved in the last 10 quarters. We are, at least in short term, both in short term as well as in long term, from a 1 to 3 year perspective, we look fairly excited about the prospects.
Okay, all right. Hi, Prashant. Morning. Thanks so much for joining in. Last year on average, you took a price hike of close to around 8% in the FY23. What about FY24? Do you think you can push through some price increases if you have pushed any through in the first 2 months?
Absolutely. We have a very consistent policy, because that we take one price increase in April and one price increase immediately post Diwali. So we have already taken average about 3 to 4% price increase across our projects from 1st of April. And we will take one price increase post Diwali to have 5 to 6% annual price increase. I think that's a very fair price increase considering the inflation, and to continue to ensure that our margins are in place, and also to keep the consumers excited. So I think we are on course for a 5 to 6% price increase this year, out of which 3 to 4% we have already taken.
Okay, all right. One more question.
So it becomes a bit more unaffordable compared to what it was earlier, right?
I was hoping that you would say that maybe you hold on to your prices.
No, why, in every business, if, for example, if the average wage growth is about 10%, and if the inflation is 5 to 6%, ultimately we are in the business of doing business. If you do not take 5 to 6% price increase, how do we ensure our margins? And if you do not achieve margins, then what is the advantage of? We are in an actual business. We cannot deliver business without delivering margins. So it is very important. And also for a consumer, we get the maximum positive response when we actually take the price increase. Because imagine we already have 55,000 consumers staying in the places that we have sold, the houses that we have sold. For them, the biggest joy is a continuous increase in the prices. And if there is a continuous increase in price, it keeps the momentum. 2014 to 19, what was the biggest challenge that housing sector faced? That we just could not take the prices up. And ever since, and it has to be in line with the wage growth. If it's a small growth, 5 to 6%, I think is in line with inflation, and that keeps the whole sector in a very positive sense, both from a developer's perspective, both from a consumer's perspective also.
Okay, got that. You have a guidance of 14,500 crores of sales, right? Can you just break it up for us into geographies? Where do you see the maximum sales coming in from? I'm asking because, outside the Mumbai market as well, you have a lot of markets that are coming up in a big way. Where do you see maximum potential for Macrotech?
You see, of course, Bombay continues. Last year when we did 12,000 crore business, we did 11,000 crore out of that from Bombay. So we already have about 10% share of the Bombay market. After 14,500, we believe that we are entering Bangalore and we are increasing our scale in Pune very strongly. So we believe that out of this 14,500 crore, roughly 12,000 crore will happen from Bombay, and 12,000 to 12,500 crore, and 2,000 crore coming from Pune and Bangalore.
Prashant, hi. Good morning. I just have a quick question. Since you are a Mumbai specialist, right? The price difference between different parts of Bombay seems to have completely disappeared. and this is a broad statement I'm making to make the point. You can charge 30,000-40,000 rupees in, Ghatkopar suburbs. You can charge that in central Mumbai. South Mumbai, of course, is getting hollowed out. The traditional upper end of the market. People are moving central. Is this trend likely to continue? I mean, of course, there are pockets of luxury which you can charge 70,000-80,000 rupees as well. But generally, it's kind of flattening out. Do you agree with that?
I think it is, of course, the location plays a very critical role, but also the brand. You see how much premium that you can charge from the brand and how much is the consumer willing to pay that premium also depends on that. So location, of course, yes. And also the kind of product and, that you are able to provide. So the pricing depends on that. So perhaps everybody cannot charge that kind of a pricing, but I think the players who have the equity with them and the consumer confidence can charge that premium. And also, yes, the pricing across Bombay, whether it's in Ghatkopar or South Bombay, was always high. But, for example, in Andheri, we launched a project and we were able to get a pricing of 40,000 per square feet. So I think it depends on the location as well as the brand that and the product promise that you offer.
So will redevelopment interest you at any point in time? It's become a big market now in Mumbai.
It all depends on, how much time, because our whole idea is that we are adding the products at about 20,000 crore GDV per annum. So but the whole idea is that the whole product, we should be able to close it out and go out of it in 2 to 3 years. A product size of about 1,000 to 1,500 crores. If a redevelopment gives an opportunity where we can close the project in 2 to 3 years and move out of it, certainly we can look at it. But of course, the back-end challenges of managing a redevelopment are much higher. So we have to look at it that perspective.
All right. What about JDA, Joint Development Agreements? Last year, how much did it contribute? And this year, you're looking at more of the same or not at all?
Of course, because it's very important to maintain your top line as well as bottom line, that what kind of a percentage of business that you get from your own projects and JDAs. Last year, we got about 40% of our business from the JDAs, and this is how we intend to maintain that, about 60% of the business coming from our own projects and 40% from the JDAs, because own projects, of course, give you better margins and the JDAs give you better return on equity. So a 60-40 ratio ensures that you deliver your top line as well as your margins, as well as ensure the return on equity.
Okay, Mr. Bindal, all the best. Thanks a lot for joining in and speaking to CNBC-TV18. Appreciate your thoughts here. That is Macrotech Developers talking about the business, the demand momentum, and of course, the way forward for Macrotech Developers.